Hello, everyone, and welcome to SCxSC FinTech Conference 2020. And the topic for this session is Evolving Financial Services, Accelerating Industry Digitization. So welcome, everyone. I'm Jasmine Peters, and I'm from PwC Consulting Malaysia. I will be the moderator for the session today. With me, very excited to have our esteemed panel of speakers. We have with us Wong Yok Fan. We have also Jeff Cruttenden and Richard Taylor online. Allow me briefly to at least give you a quick rundown of who these people are and what they do. They're masters in what they do, and we'll get a chance to chat with them. There'll be questions that you can pose as well. So first and foremost, ladies first, Yok Fan is currently the Executive Director, Deputy Head of Investor Services, and Head of IPO Team of Tricor Investor and Issuing House Services, Sendirian Berhad. She is also an Executive Director of Tricor Trustco Labuan Limited. Her primary role now is to oversee the growth of the share registry services and investor services within the Tricor Group. And this division has since expanded with the acquisition of a few companies in the same industry, including one that holds the license to operate an issuing house for companies seeking listing on the stock exchange through initial public offerings, IPOs. She also heads an IPO team that provides dedicated services for companies seeking listing, and she's currently named Company Secretary of a number of private companies who are planning to go public. Welcome, Yok Fan. Okay. Next, we have with us Jeff Cruttenden, who's joining us all the way from a very different time zone. He's nice and comfortable in California, as I understand at this point, is the co-founder of SCxSC. He's a fintech investor and a co-founder of Acorns, leading financial wellness system with over 5 million users, and SCxSC, a technology platform for open communication between companies and their owners by connecting shareholders to each other and empowering them to access their full ownership rights. Okay. The idea was born at Jeff's first company, Acorns, which he founded with his father, Walter, to radically simplify and democratize investing. Very interesting. And Acorn was hatched as an investment application to allow people to easily invest their spare change into diversified portfolios. And recently, Jeff was also featured as Forbes 30 Under 30. Well done and welcome, Jeff.
Thank you. Happy to be here.
Last but not least, we have We are very glad you've joined us. Next, we also have with us Richard. Richard Taylor is the CEO of Lumi, and under his leadership, they lead the world's largest provider for AGM technology. Welcome, Richard. Richard joined Lumi in 2011, having spent 4 years as CEO of IML, a leading global event technology business. In 2013, Lumi acquired IML and merged it with Lumi, and leading AGM technology provider that Lumi is today. Richard and his team completed a successful MBO in 2017, backed by Vespa Capital. Richard is also chairman and co-founder of Halo Post Production and has advised and supported a number of early-stage technology and media businesses. And welcome, Richard. And Richard, interestingly, is also on a different time zone. And Richard, tell us what time it is there where you are.
It's just gone 4 a.m.
It's 4 a.m. But you look very nice and chirpy and happy, and your background is nice and sunny. Somehow it looks sunny. So welcome, speakers. So without further ado, we will start with the session, and a very interesting lineup of speakers. And we'd like to start with Richard. Richard, interestingly, I mean, you've been in technology for a long time. And interesting, creating a lot of disruption. But what was interesting to note is that some of the comments you made in the work that you do is that you've been both a disruptor as well as an incumbent in the same space and time. Now, how did that work out, and how did you manage that, and what were the challenges within that space? And also, interestingly, you are in many geographies with different jurisdictions. The laws are very different, and some laws are a lot more mature in some entities and some are not as mature, probably. So how did you manage this? And I'm assuming that this is where incumbent and disruptor has come in. And so how did you manage this? Can you share that with us, please, Richard?
So Lumi, we are a provider of technology for AGMs. And as you know, in most markets around the world, traditionally, the AGM format has been quite old-fashioned in many ways, in terms of an opportunity to bring investors together to quiz a board and to vote. And that created a whole range of complexity, something which should have been very, very easy in terms of, given most investors couldn't get to the meeting, that's really where the whole concept of proxy voting comes from. But at the actual meeting itself, which traditionally in many markets had people voting by raising their hand. So our first mission, if you like, was to use technology to improve that, to make it quicker, to make it more transparent, to make it more democratic, to make it more accurate, easier to audit, etc. And we developed over the last 20 years an application to manage that process, integrating all of the proxy votes, allowing all of the shareholders who have the right to attend to be able to ask questions and to be able to vote in real time, often with digital handsets, to be able to vote in the room. And that, we spread around the world with that, and operating over 30 countries and supporting some of the world's biggest transfer agents and registrars to manage that. Now, at the same time, over the last 4 to 5 years, we've seen a trend towards virtual and hybrid meetings. And we've invested very, very heavily in that to see the format change and see it move away from a predominantly physical meeting to a remote participation meeting. So it's still exactly the same, but on the basis that it would be more accessible for more shareholders to be able to get to the meeting. Now, the trend towards that was actually disappointingly slow. Most people agreed it would happen. I remember speaking a couple of years ago in Malaysia about this trend, and actually Malaysia's been quite ahead of the game in many ways from a legislative and regulatory point of view in terms of encouraging it, but the take-up was slow. But then, of course, we all know what happened in March. And suddenly in March, not only was it undesirable for people to gather physically in a room, in many places it became illegal. So that was it's very uncomfortable to describe a pandemic as a lucky event, but it suddenly changed the landscape of what was happening. So to put that in perspective, our technology has been used in hundreds and thousands really of meetings around the world. But in terms of the virtual and hybrid, last year we did something just under 50. And most of those were in North America, US, Canada, and to a degree, Australia. This year we're going to do something like 2,500 in 35 different countries. So you can imagine this has just exploded. And and to a degree, it has disrupted the traditional format where we also had business. So that's really the being an incumbent and the disruptor at the same time. But ultimately, we're still doing the same thing for the same people. I think it's just in many cases, hybrid and virtual has turned out to be better. It certainly meant that from a business continuity point of view, being able to still conduct a meeting has been possible. Then in terms of operating in lots of different markets, that 2,500 meetings will be done in 35 countries. And that, the AGM format is relatively similar everywhere, but with lots of subtle differences. And so, from a technology point of view, it's really key on the one hand to make sure you have a single platform from an efficiency of development point of view, but that it is very configurable and very easy to configure to the precise requirements of the specific meeting or the specific jurisdiction. And Jasmine, you're on mute. Probably the phrase that all of us have used more than any other in the last 6 months.
There's an interesting question that has come in with a high vote, Richard. So I'd like to put that forward to you. And given that you've been around with many jurisdictions and many regulators, I think this would be a very good question. So how should industry players handle regulators who are quick to ban innovations, but take time to update existing rules? to keep up with technology development?
I mean,
your thoughts?
Look, in the AGM world, there's no question the technology is way ahead of the legislation in most places in terms of what has been possible for some time, but from a technical point of view, but what has held it back has been the regulatory environment. And in Europe in particular, so UK and France were very slow to respond to the pandemic, and a lot of concern and ambiguity over whether or not a legal meeting was possible. And in the end, the way around it was to say, well, if you want, you can hold a meeting behind closed doors, which from a corporate governance point of view is probably the worst of all possible worlds. And actually, there's been quite a big investor backlash against that. I think it'd be very hard to see that being allowed to happen again. I mean, in many ways, that was it was only a temporary legislative point of view. But actually, I think Malaysia, one of the benefits we have is we've seen lots of different countries and how they've responded to this. And Malaysia's fairly stand out in a very positive sense, in that the regulatory environment has been very clear and has allowed companies to know what they need to do, at least quite quickly. And certainly within the region, Southeast Asia, I think we've probably done more fully virtual meetings in Malaysia than elsewhere. And the one final point I would say is the interesting thing is, prior to all of this, there was a lot of, the proxy advisors were a bit cool on the virtual format. Many people were a bit, wary. Does this allow companies to kind of hide and so on? Interesting, what we found is the people who are most against it are the people who've got the least experience of it. And the places where it's been rolled out more, North America, Malaysia, Middle East, actually, the response to it, both from boards, shareholders, has generally been quite positive. We've seen attendance up, more questions, greater engagement, and that is in an environment where nobody would have chosen to have rolled it out like this. Suddenly with very little time, masses, of companies for the first time changing this format. So I'm sure there are lessons to be learned, but generally, I think the experience has been perceived positively.
That's very good to hear. So I guess it is there's some inertia to the acceptance. But other than that, I think people just want to get on, right? Okay, I'm just going to go on to get some more perspective before we go on to take more questions. So I'd like to call upon Yokfan for a bit. Yokfan? Can't see you on video. Yokfan?
Yep.
All right.
can see her.
Okay, I see you.
Right.
You can see her, yeah. Okay.
Yeah.
Now we all can. Hi, Yokfan. So when I read your profile, and I thought, wow, this is a huge portfolio that you oversee. So you wear many hats, but not just hats, they are very large hats. And I'd like you to share some perspective with us as to what the scope of work that you look into covers. Can you share that with us, please?
Currently, my main focus is on the investor services and issuing houses. Like currently, I'm running a few IPO. This IPO has been stuck since the pandemic, and now they are all coming up, and we have to clear it as soon as possible. And we don't know when will be the next lockdown again here. And the other area that I always focus, irrespective of what hat I wear, is actually standardization of work processes as well as digitization. Okay, and this industry, I'm in the industry that everyone in the industry is a compliance, and everything is about paper. So you can imagine the mindset of these people when you want to move away from paper, and when you want to move to IT related matters, they will just give you one response that it doesn't work, or it is difficult to move. So throughout my 20 over years of working with this company, a lot of my time actually has been spent on transforming the way we do the work. Okay, that's why I actually the question just now that you posted to Richard, I felt it. Okay, regulator is one point. The people that within ourselves is one thing. Okay, everybody want to do better. To me, every day can be a new day because I always believe we must do better today compared to yesterday, and I don't mind changing the system every day. The people that in the industry, we can find a lot of resistance to move to digital. And as to regulations, okay, the question is about ban on innovation. I don't think it's really a ban on innovation. It's more of like the regulation is not up to date to allow the digitization. I quote you one very simple example. During the lockdown, we were looking at how do we get documents to be signed by our clients, which are all locked down at all different countries. So we made an inquiries to regulators. Can we have some documents to be digitally signed? And the answer is no. All must be physically signed. So this is the industry that we're in. In terms of compliance and evidence of document is very important. So it's very difficult to move to digital. And just yesterday, I was trying to convince a public listed company to do virtual meeting instead of physical meeting. As everyone knows, the number of COVID cases is on the rise, and we are trying to encourage our public listed company to go virtual for the safety of everyone. But that needs a lot of effort and talking and convincing. Okay, we are not asking them to do something, against the law, because here in Malaysia, we have the support our securities commissions to allow meeting to be fully virtual. So it's totally, according to the regulations. But to convince the player, the listed company to do it takes a lot of effort. So to me, in short, it's actually the mindset of the people in the industry. It is a regulated industry. Everyone's top priority is compliance. Everything that you say, you want to change, can I do this online? The first question they ask you, is it legal? And when you open the book, look at the regulations, this regulation has been there for umpteen years. Would you find anything that allows it? No. So then there's this statement about if there's nothing against it, looks like you can do it.
Why not?
Nothing they say you can't do it, okay? So the industry is such, everything is guided by the regulations. So it is true that it is hard to move away from the papers, from the wet ink signing, and the mindset of the people.
How are you approaching this mindset management? And I can understand that it is the hardest, and it's an environment where it's very rigid. It is very rigid. It's highly regulated, and there's a lot of fear. You're dealing with a lot of money as well, right? People's money and investments. So what are the steps that currently Tricor is taking to address this kind of a mindset via your technology?
Now, when we first rolled out our online platform, there were not many people who can accept it, even our client. Like you say, is it safe? Yeah. I even get the questions, from one client who asked me, is your platform hacker proof? You get that kind of questions, okay? So,
wow, okay.
Is there any system in the world that's hacker proof? Can anyone tell me? I think that's none. Okay, so yeah, we have to take baby steps, step by steps. That's why I always say the most sexy technologies may not work in this industry. You have to first look at the target of the user, and you build the platform according to the user. So, and you have to roll out module by module, do something that it's not so high risk first. That's what we did on our platform. Our platform was rolled out a few years back on the safest module, which doesn't involve payment of subscription money, because our platform allows online subscription of shares. But we first roll out to a corporate exercise that doesn't involve payment of subscription money. It involves an indication of their wish whether to reinvest their dividend entitlement. So we took that steps, introduced something which is not so high risk first. So that is actually giving them the flexibility or an alternative way to submit a form. Because in our industry, all the forms, the subscription of shares form are mostly physical, okay, except for IPO, which has been transformed to online many years back. The rest of the corporate exercise, there are still a lot of forms, and we are the culprit who generate a lot of checks. Okay, we used to pay a lot of dividend payment. We pay refund checks for unsuccessful applications, all via checks. Can you imagine it? Okay, we have machines here to print the checks and people here to put checks into envelopes and send it out. Those are the days. Okay, we have moved a long way to me, and this pandemic during the lockdown, we had to run a few corporate exercises where it involved forms coming in from shareholders from all over Malaysia. Okay, and we also do a lot of sending of notification to shareholders, notifying on corporate exercise. And really, it's a tough journey. When we want to move all notification to digital, we were told that the central depositories, all the investors, only have 30% of them have the email accounts. Can you imagine how to convince the client to do e-notice when there's only 30% email there? Okay, so you have to take a baby steps. So and then this pandemic has given us good opportunity, people mindset, because you have no other ways. The only way is go e. Because during the lockdown, we can't even find printer to print. There was one time even the post office, is not working. So the only way is to e. So with this, now we have more acceptances. So it is doing one thing at a time. You can't rush. You can't push too fast. You can't roll out too sexy things. Okay. So the mindset is everything must be safe, secure, tested, proven. So that's how we in this industry roll out. Even the compliance, like secretarial industries, same thing. You want to transfer every paper into digital, we still have this question mark of the signing. Digital signature in Malaysia, it is not so popular. And I think every citizen who pay tax have a digital signature, but that digital signature belongs to the Inland Revenue. It doesn't belong to you. You can only use that digital signature to sign the income tax form, not any other document. So when we want to roll out a platform that requires digital signature, we have a big challenge. And we can't get all the investors, please get yourself a digital signature. So this digital signature you can only use when you deal with TriCore. We can't do that. So at the end of the day, I have to ask myself, how many, as a citizen of Malaysia, how many digital signatures do I hold? Do I hold one for TriCore? Do I hold one when I deal with the LHDN? Or do I hold another one when I deal with the banks? So how many digital signatures do I hold? So this question is still no answer until today. So I hope that we have national digital signature issued by the government, so that every citizen, when you are of certain age, you can legally sign documents, you get a digital signature that you can use for any documents.
I think the concern is quite valid if we look at it from the user's perspective, right? I think there's a serious concern with the security, especially with signatures, as rightly pointed out in Malaysia. That is something that people will be very apprehensive to release. But what I really like is what you said about how you're managing the mindset, right? Because I think everybody talks about digitalization within the industry, especially with the financial industry, financial services industry. But I think the change needs to be incremental. I think there's a lot of look for and search for and hunt for that silver bullet that will digitize us, and suddenly we'll wake up and, it will all be smooth and, technology will take us through. But I think that's what's really pertinent as we accelerate digitalization in the industry, as we take it forward, to make it incremental changes and to, be fit for purpose, right? I think that is a very good learning that you put forward today for us to ponder on further. With that, Jeff, what Yok Fan has said is not really a time for us to be very sexy with what we're doing. Looks like on your side in California and what you're doing comes across quite sexy, actually. So I'd just like to understand from your perspective. You talked about financial services being inclusive, and this is something very dear for us on this side of the globe, where, as I said, we're looking at regulatory movements into the virtual banking space, where the ask is that there is inclusivity for the underbanked and unbanked group of people. And there are concerns around this, yeah? And there are concerns around this because of, one, how will we reach? One, right, it's the reach. And two, the concern is around the fact that how will the margins look, right? So for incumbents as well as new entries or new banks that are coming in, these are some of the key concerns. Can I have your thoughts on this, please, Jeff?
Absolutely. So, there really is a huge opportunity focusing on, expanding the pie for, access to financial services. With my first company, Acorns, we wanted to distribute investment accounts like an app, not like traditional financial services. And I was a college student at the time, and most of my classmates, they weren't investors. They didn't have investment accounts, even though they were studying finance or economics. And what's really interesting is, if you can build a product to serve these customers, which are all digital, they live on their phones completely. You can actually, get people started early. These are customers. They may start as small customers, but you can help develop them over time. And for us, building our technology to handle small accounts on your phone, all the infrastructure we had to build to support that can serve all sorts of accounts, but sort of that serving that lowest common denominator actually helped us build more powerful, scalable technology. And the questions that a new, in the case of Acorns, a new investor might ask, and the standards they have, it's actually a pretty high standard. They may not be familiar with investing, but they have a high standard when it comes to technology. And there's this power of the App Store that really helps, I think, financial technology, which is, people expect an app they haven't heard of to revolutionize their life regularly. People regularly expect this. And so this translates to sort of a superpower for financial services within mobile, because you can introduce an app like we did at Acorns that no one has heard of, and yet the goodwill from the App Store actually translates to trust in our product. And what I'm getting at when it comes to inclusion is you have so many young people that live on their phone, and really all of us, I think, live on our phone today. And finding a way to serve them actually has proven extremely helpful for us outside of it. So we built a product to serve college students, making it easier. But what did that mean we had to do? We had to make it, a 2-minute process on your phone using information that's top of mind. We wanted to make sure that people could start super small. So we allow people to start with investing just their spare change, adding it up in the background of life. And these things actually forced us to build a platform that was quite robust. So we had to handle very small transfers of money, very small investment accounts. We had to economically carry all these accounts. We built our own self-clearing broker-dealer, affiliated investment advisor, trading systems, record-keeping systems, a whole bunch of infrastructure to develop what many could say is sort of like, okay, that's a cute interface or app. What's really under the hood? But by building that, we built a company that could actually interface with many different types of companies, can serve people of all ages. And I think the long-term vision is, of course, to develop these young customers in particular. And there are so many people out there that aspire to be investors. And in the case of Acorns, that's why it's so powerful, because you give people access to investing. I think it's the most interesting financial service. It's inherently long-term and aspirational, and it really invites people to learn more about financial services. And I think it's crazy that we would have anyone go to college that doesn't have an investment account, especially if they're studying finance or economics. It's a cheap ticket to actually pay attention. And so, inclusion has served us well. And we built the product to use it ourselves. And we found that college kids, young people in particular, they may not have that much money, but they're extremely social. And they talk about the products they use religiously, and they share it with their families. And so we're able to see pretty massive account growth pretty quickly, because we built a product to serve this group that many thought, hey, they don't have enough money. We'll be interested in them when they have a few $1,000s. So there's a lot of opportunity in serving sort of I think certain groups that may be seen as not necessarily having enough money, because if you actually develop a solution for them, then you have something that maybe structurally changes the cost of the product that you're offering. I think you're muted. Oh, I can't hear you.
Sorry, I was on mute. I thought that the perspective that you shared with us and how you actually grew this, the idea that it encompasses is actually very interesting, because it's a whole different way of approaching financial services, right? It's not so much what products we want to put out there, but what's going to serve and what's going to be relevant. So that's very interesting. What we also like, Jeff, and when we spoke earlier, you said you don't know where I got this from. But it really struck a good note with me is when you said to stay modest and to not get carried away by unnecessary distractions. And a bit of context to that, you started your first investment with a cheese company, and you said, watch the cheese not on the pizza. But how do you keep this? How do you keep this modest, right? And what does it really mean? Is it the approach to how we invest in those portfolios? What is the lesson here for us from you when you say to stay modest, and what is the distraction that does come into play?
Well, I think that in the case of Acorns, we're effectively selling investments. We can't promise the world, and so we keep it simple. We keep it low cost. We focus on diversified portfolios. There's a lot of sort of, I think, traps in this world where you can sort of sell what is effectively gambling. And you really have to keep expectations relatively modest. And So and in my own investing experience, when I was young, yes, I did buy a publicly traded cheese company. It's the first stock that I bought, and it went bust. And it's one of the reasons that I wanted to start a company that actually automatically diversified portfolios into low-cost index funds. But you have a lot of responsibility when you're serving new investors, and you can't promise the world, because if you make a mistake there, you might scar them, and they may avoid investing for a long period of time. We want to get people started, small, diversified, low-cost ETFs, and really invite them to learn. And so people can learn a lot when they're in the markets, especially from a young age. And we think that if people, by the time they're 30, if they've been investing for 12 years, they will experience the market cycles and ups and downs, and actually, hopefully invest more wisely when they're older and when they have more significant assets, versus if they're investing for the first time when they're 30 or 35 and it's a significant nest egg and the market takes a turn and they freak out and sell everything.
Muted again, Jasmine.
Thanks, Jeff. Thank you for that. Keep going on mute.
Lip reading a little bit.
Oh. Right. Okay. I'd like to put forward some questions. In the interest of time, I think we're 35 minutes into the hour, and there's this one that's asking us about why do we only focus on digitization instead of digitalization? Who would like to take this? Would you like to take it, Jeff, or Richard? Would you like to take this?
Well, a good place to start would be to describe what the difference is. I looked into this actually. Yes. Correct me if I'm wrong, but my sort of understanding is really digitalization is the kind of combination of lots of elements of digitization. So in a meeting context, we have the whole AGM process will start from a notice of meeting, communications with shareholders, managing proxy voting from beneficial institutional owners, retail owners, very, very kind of complicated. The meeting itself, what happens to the data afterwards. And traditionally, all aspects of that were analog. paper, hands, and so on. And what we would like to see would be the total digitalization of the whole concept and turning it into a single platform. But actually, that amount of change in one go is pretty tough. Yoke Franz made a really good point about this. You've got to take baby steps, and the baby steps are perhaps about finding specific elements of that entire environment that you can digitize. And the more each bit is digitized, the easier it becomes to integrate that in a process of digitalization. I don't know, is that what it means?
I agree.
Well, I think
it is. Yeah, go ahead.
Oh, sorry. No, so I was thinking, so from our side, so I come from sort of we started in digital, we started in mobile, in that world, and then we were forced to interface with with the world that really wasn't digital first or mobile first, and the experience was unacceptable for our mobile first customers. And I think in this world, if you have an investing experience that lives on the phone, and if you have a voting or investor communication experience that lives, certainly if it's physical mail, that's crazy. That's suggesting that it's not part of this sort of main experience. But even if it's email and the product's delivered via an app, you're not giving it the same attention, innovation, and experience. And so I think it's not just bringing products necessarily to sort of the digital world. It's really making sure that this part of investing is on par with the other parts where we see a ton of innovation.
It's interesting. On that note, this is another question which I think is very interesting, which is the question is, how can banking industry accelerate digitalization when the government still has not approved signatures for verification? And another one, which is very similar to this, would be, what then would be the most important digitization for the financial services industry to consider? Let's ask the question. I think that's the one that is quite important that people want to hear. What would be that area of digitalization? Digitization is it for the financial services industry? I don't think we have to limit it to one, but if we're going to start looking at this very seriously, what would that be? From where I sit and stand in terms of consulting services, when we advise companies in financial services, we always find that it is the appreciation of what's really digital. And the immediate reaction and the response is usually to go out and hire people who are technologically savvy, right? So typically your Java, Python, you bring it in to start looking at data and codes. But would that be what's primary for financial services to look at? And we're looking at more incumbent players here, I would say. What would your advice be?
Well, I think, many of the companies, especially these newer fintechs, which are offering really fantastic customer experiences, but one advantage that I think some of these tech first firms have is the regulatory infrastructure that's built, even the corporate structure of these companies. It's all designed to serve the customer experience. And I think when it comes to a lot of the regulations, or even if you have a regulated entity, it's very difficult to switch that to a digital first firm. I would argue it's potentially more difficult much more difficult to switch it to digital than just starting from scratch again. And so, I think from even considering, written supervisory procedures and all of the operations of these firms, if it's difficult from a regulatory perspective to actually switch over, I think, what you might happen is sort of a real lack of digitization. Some sort of ease in that transfer. I personally think that there are going to be many, many new firms started around the world, new licensed regulated entities, and that are designed to serve the best customer experience. And And I think that, you know, incumbent institutions will have to either acquire those or partner with those to really keep up, because I think it's going to become such a limitation on the experience side, in particular on the onboarding side, if something isn't done.
I couldn't agree more, actually. It is really the user experience that will propel the industry, right? That's the perspective I feel is what's important. And again, it's a blind spot for many organizations. And because we are so hooked on the technology itself, we forget, or rather sometimes there's a little bit of delay in appreciating what the customer will really want, or the clientele that we serve in terms of that interface and that experience. And that should really propel then what that digitization agenda should look like. Thanks, Jeff. On that note, I'd like to ask, sorry, Jeff, is there something you'd like to add?
No, I'm just agreeing, Donna.
Okay. All right. On that note, Yok Fan, very interesting to get your perspective on this, given that you've been in the industry for a very long time. And as we just spoke, what the interface is going to look like and what that user experience is going to be. What do you feel has been the biggest shift and in the recent times in terms of technology for the industry that you're serving?
I think the biggest thing is people start to realize that there's no two-way about it. You have to go digitalization or digitize everything. You have to just think of a way to do away with the paper and the processes. So they come to realize, but the thing is how to do it. As I have mentioned, the industry is so rigid. Everything is regulated. Everything, you know, you talk about whether it's legal. Everything you want to move to another way of doing things, they will ask whether it's legal. And we have also mentioned about, in terms of our legislations, it may not give us the flexibility to do away with a lot of the paperwork, a lot of the signing. So the people who is in the industry is seeing it. But I think what the industry need to do is work together with the regulators, highlight areas that, you know, it is critical, important to do. For example, you know, just get the investor to provide their email address. How difficult can it be? Okay, so you would definitely face a lot of resistance and a lot of excuses for not doing a thing. Okay, so we have to work together with the regulators, make things happen. Just bring up, we have to look at the whole spectrum of the processes. For example, just now you talk about banking industry. We talk about user experience. So I am one of those person who hate to deal with bank. Okay, and as a bank customer, I like the idea of everything go to the using the apps. Okay, I keep telling people I don't need to go out with my wallet. I go out with my phone. But there are still a lot of people around me. They don't believe in e-banking. They don't believe in downloading the apps for e-wallet. You know, there are still a lot of these people around. So the education is also another area. So I keep asking myself, we want to move to digital era, and is the people ready for it? And who is responsible to educate them? I think it's sad to say that, you know, they are official formal education system in Malaysia may not have done enough to educate the people, especially the graduates when they come to the workforce. How ready are they to accept the new world if their syllabus is still in the old world? So, and as people move to working life, you know, who is responsible to upgrade them and all this? And with all this digital effort coming in, personally, I feel that the education is lacking. Whether it's educating the workforce or it's educating the general investor or even the bank customers, you know, when bank introduces more and more sexy product, does the customer know what is it and how to do it?
think, it's interesting, Jasmine, that we've been describing two worlds. On the one hand, Jeff described as digital natives, predominantly younger people for whom expect everything to be entirely digital. And then when they run up against the aspects of the system, which is still very paper driven, quite bureaucratic, lots of difficult to understand rules, it sort of hits a bit of a wall, and that's a problem. And on the other hand, as Jörg Franz described, there are a lot of people who understand that world and are confused by the increasing digitization that is happening. And it's how do you move forward with that? And at the same time, particularly when you're looking at financial services, which is on the one hand, it's a very regulated industry, lots of top-down directives at a global level, at a local level. Yet we're probably seeing more innovation in financial services from a bottom-up perspective than ever. So I think, how do you deal with these sort of two extremes in two different dimensions? And I think, you've got to accept that, as a human race, we progress. That's what happens. And we generally don't want to go backwards, and things do move forwards. But the key to all of it, I think, is just to simplify it, to work. Technology takes longer to make it easier, and that experience comes from the user experience and the iterations around development that are largely around making it easier for people to interact with that technology. And we've all gone through a phase in the last 6 months where most people have taken a huge leap forward in terms of their adoption of technology and use of technology. And it shows it can be done. I mean, ideally not with a pandemic to be the catalyst, but that has got to be the direction. But I think from in the bottom-up perspective, from the people developing this, you've got to make it easy. And the top-down aspect of this, from a regulatory point of view, it's an industry that has to be regulated, but you've also got to make it possible to keep it for others to be able to make it easy. So I think the key in all of this is simplify, simplify, simplify.
On that note, Bridget, was that also the impetus of how you put together your own software right down to your keyboards? Was it so that what was the reasons there? Was it so that you could scale, or you could then create the next generation of what technology and digital should look like for financial services?
I think your friend described this. It's about baby steps. It's not making too big a change in one big leap. I mean, if you think, if you were somebody who, 20 years ago had a mobile phone and then was suddenly fast forwarded to today and you were about to get the next iPhone 12 next week, whenever it comes out, you'd really struggle to understand how that works. But if you've lived that 20 years and you've had a new phone every couple of years and you've gone through the various stages without realizing it, you've just adopted the technology and learned it in an iterative way. So one of the things we've always done is try to make sure that, particularly in a meeting environment where you're giving people technology, right here, right now, you haven't got very long to kind of learn how to use it. It's you've got to it's got to be something which is familiar. So interestingly, from a handset point of view, one of the first, nearly 25 years ago, one of the first handsets we designed was quite similar to a pocket calculator, knowing that that's what many people were familiar with using. A later one looked like a Nokia mobile phone. One after that looked like a BlackBerry. And then, of course, now it's all app-based in an environment which people are familiar with. And that, I think, again, you move in iterations and you move step by step, but it must move forward and it must simplify. Muted again.
I need to sorry, I keep muting myself because I'm afraid it'll pick up the traffic outside my office. I have the MRT running right across behind me. Anyway, Jeff, can I ask you a quick question, Jeff? It was very interesting that you also spoke about. Sorry, can you hear me?
Oh, go ahead.
Yeah.
Yep. I hear you.
Yeah. You did say that you spoke about innovation, and clearly, what you've done with Acorn and with Say is clearly state of the art, and it's innovation at its best. But you did also mention that as you move forward with technology and digital, that storytelling is also very important. Now, how do you put that into place? Because we always have this perception of technology being very backroom and putting wires and chips and things together. So how does the storytelling come into place?
Well, I think in finance, storytelling is really an opportunity to dig into history and teaching people about their rights, teaching people about everything that comes, in the case of an investment account, everything that comes with it. And so, people are really excited and primed for a story, especially when they're setting out on an adventure like, opening their first investment account. And we have a window where we can teach them quite a bit. And I don't think enough happens today when people open an investment account. I think we certainly cover how to trade and that side of things, but the actual investor communications and voting and other rights that come with it, I think there's a lot of room for improvement there. And so when I look at storytelling, I like to look at the history of finance or the history of shareholder meetings, because it can really root what your product's doing in real world practical examples. Because the things that we build, we don't build this experience on mobile just to see random screens here and there. It's rooted in a practical purpose. And so when you streamline something, I think you need to anchor it in some sort of story for people, especially in something like finance, where a lot of people are intimidated. They think, I can't understand this. They think this is sort of beyond my capabilities. And so teaching them how it works, teaching them the history of it, it's really an opportunity to invite them to participate. And so, I think it helps, as a company, as we build it, it helps, from a tech first company, helps the engineers and designers who maybe don't come from finance understand what we're doing. And certainly for new investors and customers, it helps them, really feel like they can actually participate and understand this, because education is so built into what we do, and it helps us too, because we help develop better customers. We want nothing more than our customers to build wealth over time and get better and better at it and stick with us.
Thanks. I have one more question to ask before we call the session to a close, and that there's a question here which says there's a fine line between risk and user experience. So should regulators be more open towards risk? And so I would think this is around the education with the regulators, but some perspective, please. If I can ask Yok Van to take this question.
Yeah, I was looking at the question. I find these two questions very interesting. Okay. The question here is, should regulators be more open towards risk? I would say they will not agree with this. Okay. It's not more open to risk. It's more about managing the risk. So another aspect of our business is actually helping our client to do risk management, all aspects of risk management. As the business change to the digital world, the way we manage the business, the way we manage the risk change tremendously. So as, for example, when we roll our platform, that accept money from public to subscribe to shares, risk is definitely there. It's how do we put in the necessary procedures and measures to manage the risk and convince the regulators that the risk is being managed to the minimum.
Yeah.
It's not asking them to open up to the risk or increase the risk level or increase the risk appetite. So even before you go to the regulators, as a business owners, before we roll anything, we have to convince the business owner that the business is being managed, the risk is being managed. So it's the way we manage the business, manage the risk has to change.
So with that, I'd like to call this to a wrap. I'd just like to summarize some of the key points that we have discussed here today, which I think has been very insightful, and that it will leave you with a lot of food for thought before we move on to the next session. I think what was fundamental is when we looked at accelerating digital in the industry and evolving financial services, as we spoke, and we've seen some of the plays in very different markets and the challenges that this has had, right, on all of you, the impact this has had, regulatory impact, jurisdictional impact. mindset, receptiveness to the shifts, right? And of course, there was a pandemic to throw a spanner into all of it. But I think what the pandemic did was to accelerate the way we want to think and work with digital and technology. And that will continue, right? And that will continue to accelerate. But what was important is that I think as we build ourselves, our organizations, our people, and the technology, it must be purposefully built and driven. There's a promise that we give to our people who come onto our platforms to bank or to do business with us. And I think there was a common theme that we take small steps, right? Incremental steps, and we grow. And that is from a state of technology as well in terms of the services that we want to bring to the market and to transform the industry slowly but surely. And what was another thing that was pertinent is that as we look at technology and as we look at mindset shifts towards being more receptive, is to also appreciate that people also need to move from being transactional, and our services need to move from being transactional to being more inclusive into the user's lifestyle. And so whether it's a platform or an app, in terms of the interface, whether it's going to be the kind of service, we should look at it from an outside-in perspective as we go forward. So that was some of the good takes I felt was very important. That customer interaction focus was primary. And again, as I said, from where we sit, as we see organizations always look at technology as the silver bullet, but there's a lot of thinking that needs to go into the whole aspect of moving and accelerating digital into the financial services industry. And there's a lot for us to work around the current laws and regulations, and also the receptiveness of the regulators as we move forward. But we're looking towards people like yourselves, who are the movers and shakers of the industry, to work hand in hand with the regulators to bring more evolution to this space. So with that, I thank you so very much, Yok Fan, for your insights and your sharing. Jeff, thank you so much. It was great to have you on the call and to see this philosophy that you apply to how you've set up Econs as well as SAY. And Richard, with this phenomenal move where you're leading this technology across the globe, and I'm sure it's going to be even more phenomenal. And as you said, this whole thing has exploded. I wish you all very well in your endeavors. And speakers, once again, thank you so very much.
Thank you.
Thank you.
Thank you very much.